All right, so we're doing a deep dive into Schwab's latest earnings call.
Yeah, their fall business update for Q3 2024.
And I'll tell you, this is interesting. This isn't just like, your typical dry numbers financial report.
What's fascinating here is this contrast. You've got Schwab navigating the integration of Ameritrade,
Yeah.
right? That's still unfolding.
Right?
You've got obviously the market conditions, interest rates, client behavior shifting in response to all of that.
Right. They've got new leadership coming in too.
Exactly. We've
Yeah.
got Walt Bettinger wrapping up his tenure as CEO.
Yeah, this is his last earnings call, right?
His last earnings call, exactly. Rick Wurster waiting in the wings to take over.
Right. January C stacks up.
January 2025, yep.
Mhm.
And then, of course, you've got, on the financial side, Peter Crawford also on his way out as CFO.
Yeah. So Mike Verdeschi is stepping in. It's a whole changing of the guard, kind of a big deal.
It is. It is a changing of the guard. And yet there's this, wouldn't you say, this undercurrent of optimism?
Yes. And they have reasons to be optimistic. I mean, their client wins are through the roof. Their net new assets more than doubled year over year.
Yeah, it's incredible. And that really speaks to, the success they're having with this through client size strategy that they've been talking about.
So they want to be everything to everyone.
Essentially, yeah. They're trying to cater to a very broad range of clients, from kind of your everyday investor all the way up to, high net worth individuals.
Sophisticated investors, yeah.
Right. And they're doing that by offering a really wide range of services, and they're investing heavily in technology.
So it's a combination of, appealing to everyone, but also making sure that they've got the tools and the services to actually deliver on that promise.
Exactly. They're trying to make the experience, regardless of who you are as a client, as seamless and beneficial as possible.
It seems to be working. Especially, I mean, remember all the talk about, like, what was going to happen with those Ameritrade clients after the merger?
Right, right. Like, would they stay? Would they jump ship? There was a lot of speculation.
And it seems like, from what they're saying, those clients are actually pretty happy.
Yeah, they're not just staying, but their satisfaction levels are actually up.
That's huge.
It is. Because that's not easy to do, and to integrate such a massive acquisition and actually improve the client experience in the process.
It really is kind of incredible when you think about how tricky these mergers can be.
Oh, absolutely. Integrating a company the size of Ameritrade is no walk in the park.
No kidding. And to come out the other side with higher client satisfaction.
That's a testament to, I think, their focus on the client experience.
For sure. For sure. And it seems like that focus is paying off in other ways, too. I mean, we're talking record-breaking advisory flows.
That's right. More and more people are turning to Schwab for financial advice.
Why do you think that is? Is it just the market uncertainty?
That's definitely a factor. I think people are looking for a steady hand when things get rocky. But I also think it speaks to a broader trend of investors wanting more than just a platform to trade on.
Yeah, they want guidance. They want someone to help them make sense of it all.
Exactly. And Schwab has done a good job of positioning themselves as not just a brokerage firm, but a trusted advisor.
Especially with that Schwab wealth advisory thing they've been pushing.
Right. They're really trying to cater to a more holistic view of financial planning.
It makes you wonder if this whole shift towards seeking advice will stick around even if the market calms down.
It's hard to say for sure, but I think it's a good bet that people are realizing the value of professional financial guidance.
Makes sense. Makes sense. But speaking of uncertainty, remember all those headlines about people pulling your money out of the market?
Yeah, the great cash exodus of 2024.
Right. Everyone thought the sky was falling.
Yeah.
But now it seems like things might be stabilizing.
Yeah, according to Schwab, client cash is stabilizing, and they even saw a significant inflow in September.
Maybe a glimmer of hope there.
A cautious return of confidence, perhaps.
Cautious optimism, that seems to be the theme of the day. And they're also being smart about paying down debt, right?
Absolutely. They're chipping away at that supplemental funding they took on, and it's down over 30% from its peak.
That's got to be reassuring for investors to hear.
No doubt. It shows a commitment to financial prudence, which is never a bad thing.
Not at all. But let's talk about the future for a second. They're sitting on a pretty decent pile of cash now, right?
They are. Their capital levels are looking quite healthy.
So does that mean we might see some of those stock buybacks that everyone's been whispering about?
Well, they did say they're on track to meet their financial targets.
Right.
And they're prioritizing paying down that supplemental funding first.
Makes sense. Get that taken care of.
Exactly. But they did hint that once that's under control, they'll explore other ways to return value to shareholders.
So buybacks are still on the table?
Potentially. They didn't make any promises, but it's definitely something they're considering.
Interesting, interesting. And it's not just buybacks, right? They also mentioned something about new offerings.
They did. They're looking at expanding their services for ultra-high net worth individuals.
Oh, really? The super rich getting even richer.
Well, they've got increasingly complex financial needs.
I guess so.
So think tailored investment strategies, access to alternative investments, maybe even concierge-style financial planning.
Wow, talk about white glove servicing.
Exactly. It's about catering to the very top tier of wealth management.
So they're not just focusing on the little guy anymore.
Not at all. They're also looking at ways to better support registered investment advisors, or RIAs.
RIAs.
Yeah, these are independent financial advisors who use Schwab's platform for things like custody trading and other operational needs.
Ah, so Schwab is like the engine behind the scenes.
Exactly. And by providing more support and better technology to RIAs, they can attract and retain top talent in the advisory space.
Which in turn attracts more clients.
Precisely. It's a win-win.
Smart. Very smart. But there's one more thing we need to touch on before we wrap up Walt Bettinger's farewell. This was his last earnings call as CEO.
Yeah, it was a really poignant moment, actually. It was. You could tell he's been reflecting on his time at the helm.
And he didn't just rattle off a bunch of financial achievements, which would have been impressive enough on their own.
Right. He went deeper than that.
He did. He talked about legacy, about Chuck Schwab's vision for the company.
Building something that would stand the test of time. That's what it sounded like to me.
Exactly. And I think that's what really struck me. This idea that it's not just about the next quarter or even the next year. It's about building something that's going to last.
Which is rare these days, right? In a world obsessed with instant gratification.
It is. It really is. And it made me think about how much the financial industry has changed, even just in the last decade.
Oh, absolutely. Technology, regulation, client expectations, it's a completely different ballgame.
And yet, here's Schwab, not just surviving, but thriving.
And a big part of that, I think, is that they've managed to stay true to those core values that Chuck Schwab established all those years ago.
Right. The focus on the client, on providing value, on being a trusted advisor.
And Bettinger seems confident that those values will continue to guide the company under Wurster's leadership.
Yeah, it feels like he's passing the torch, not just stepping down.
A torch that's been burning bright for a long time.
Exactly. And that's what makes this whole deep dive so fascinating, right? We've got this company at the top of their game, record client growth, a solid financial foundation, and this leadership transition that feels more like a continuation than a disruption.
But it does make you wonder what challenges they'll face in the years to come.
That's the million-dollar question, isn't it? Because as much as things seem to be going well for Schwab right now, the financial landscape is always shifting.
Absolutely. New technologies are emerging, client expectations are changing, the competition isn't going to sit still.
So the question is, can Schwab adapt? Can they continue to innovate and evolve while staying true to those core values?
It's a tightrope walk, for sure.
It is, and it's something that we'll be watching very closely in the months and years to come. But that's the beauty of a deep dive like this, isn't it? It's not just about getting the headlines, it's about digging deeper, asking those tough questions.
And trying to anticipate what's next.
Exactly. Because in the end, knowledge is power, especially when it comes to navigating the complex and ever-changing world of finance.
So keep learning, stay curious, and until next time.